Welcome to Subramani. Talking about recession is easy, and we can always see it coming. Every day it is coming. There are people who tell you that under the Modi government nothing great has happened, so we are about to hit the worst in the market. But the markets have done what it has done over the last 10 years. I'm not even getting into UPA versus NDA or things like that. The market does what it does, right? So in 2013 itself, market started booming, saying, oh, 2014 there is going to be a change of government. It did happen. Whereas in 2023, we do not know what is going to happen in 2024. We have to just accept that we do not know. That is very important. So when we are talking of a bull market and a bubble, let us go to a very famous quote by John Templeton. And because it's a quote, I want to say exactly what he said. And he said, bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria, right? So remember these words: pessimism, skepticism, optimism, and die on euphoria. Now what happens is, the market is a good market doing well, and suddenly the market starts going sideways, nothing happens, and then there is a straight 20% fall in the market, slowly grinding, but a fall, right? Unfortunately, the market does not say, oh, now is the time of skepticism, now is the time of optimism. There is no such announcements. Later on you find out, oh, here there was so much of skepticism, there was so much of worry, people did not know what is going to happen. So when the markets are down, it is so much down that people look at the companies and say, oh my god, this is I can get a better yield in a share than I am getting in a bank deposit, right? So yields are very attractive. And then you realize that, okay, this is not too bad a time to invest, because I'm getting 7% in the bank deposit, and I need to get maybe 8% in equities. So that is their expectation, not very high expectation, and they start getting 8% for 1 year. Next year they get 10%. Without selling the share, they get some dividends, etc., some split bonus, something happens, and their returns start improving. So but still their expectation is very low there. And interest rates, let's say interest rates have gone down further to 5%, then they are looking only for 7% return in equity markets, and that is easy to get, right? So we are what is called a pessimism. The pessimism is, markets are nothing great, markets have too much of risk, but I'm getting a return slightly better than a bank fixed deposit, so let me be there, because over the last 3 years I've got much better return than whatever I got in a bank. At this stage, when the market goes up, people are still not very they are not euphoric. They are still wondering, the market has gone up too high, too fast, should we sell? And some of them are selling, but not all of them are selling, and a lot of new people are coming. Look at the size of the Indian population, and look at the number of equity investors. So yes, the new people are coming into equity investing. Of course, many people are coming in through mutual funds, life insurance policies, etc., which is called ULIP, and so a lot of money is coming into the market. So markets are going up. People are still people are reasonably now turned to optimistic stage, which is the second stage according to John Templeton. So the pessimism is getting over, and now there is still skepticism, saying, oh, this is too much, this is too fast, this is too high, this is too high a dividend, this is too much of a buyback that they are doing, etc., etc. So still there is skepticism, but the market goes up. Now what has happened is, you have forgotten that you wanted to invest for getting that extra 1% or 2%. You were getting 5% in a bank FD, you wanted 6-7%, therefore you kept to equities. But now you have got 10%, 11%, and or maybe 16% or 17% in the first 2-3 years, and then you keep forgetting why you came into the market. You now start thinking, no, I was skeptic. Subra kept saying you will get only 12% return, but fairly obvious, Subra doesn't know. I've got 16, 19 and 22% return. So that is the new norm. Subra is too old, he does not understand. So now we are still, we have moved now from pessimism, skepticism to optimism. At optimism stage, you have a lot of people coming and giving you tips. YouTubers saying, oh, markets have now changed, a lot of new participants have come, therefore markets can never go down. How much soever the Sensex goes down, it can never go down below 50,000 or 55,000, some magic number which they have picked up, and they've said, oh, if you see the channel being made and this is the bottom, you should be buying more, right? That's how you're told. So 60,000 you bought, 59 you bought, 58, 57, 55, 54 you bought, then what will you do? That is the question to answer. But now everybody is giving you a tip. Markets are high, markets are booming, everybody is talking about unicorns, everybody is raising money. This is now, is it optimism or is it euphoria? That's a call that you have to take. It's not going to be very easy for anybody else to tell you. And remember one thing, when you're sitting inside a bubble, you cannot see the size of the bubble, you do not know when it will burst, but you know one thing for sure, when it bursts, it will hurt a lot of people. Be prepared not to be in that list of people hurt by a bubble burst. So what really is a bubble? Just market optimism of seeing the market go up is not a bubble. Market could go up and the companies could show very good results, and that is a bull market, right? It is still not euphoria. Euphoria is when the companies start coming out with bad results and the market goes up, which means the results are bad, but the investment sentiment, investor sentiment, investment sentiment is still euphoric. They say, oh, this recession is not such a problem. US recession, no problem. Indian IT companies will do well because US IT companies have much higher cost than Indian companies. Everything the market will find a reason to brush and say, oh, this is just the beginning. Now more things are going to happen. Do you know how many people are starting SIPs? Do you know people are starting 500, 1000, 5000 rupees kind of SIPs? So a lot of money is coming in, and so much of mutual fund buying is that the market can't come down, right? All these things are justified to you, saying why, even though the results are bad, it is bad only for this quarter. Next quarter markets will improve. This is bound to happen. See what is happening here, blah blah blah. We are the fastest growing economy. Everybody, all and sundry, everybody wants to give you a tip. That is bound to happen. So, and at the same time, the numbers come from companies are not very encouraging. Auto sales are down, car sales are down, exports are down, nothing really great is happening, services exports are down. When you see all these things, and still people very optimistic saying, oh, there is going to be an infrastructure boom because of this, A, B, C, D will happen and things like that. These are the very good I would say roadmap to a recession. When you see all this happening, that is the time when the markets are likely to be bust. The bubble is likely to be bust. When I say likely to be bust, I mean a 20%, 25% fall is, we are creating the necessary conditions for a market to fall. So if all these things are there, I'm not even saying it is there or not there. If you see around yourself and you see everybody is optimistic and the results which are coming are not good, you can be sure that the bubble is going to bust. Will it bust today? Will it bust after 3 months? Will it bust after 5 months? We will never know. And during this period, the returns in the equity markets could be sensationally good. You could get a 30% return in say 3 quarters, 1 quarter or things like that, exactly at a time when interest rates are not very steady. They're actually going down. And when you see this, those are the signals of you being or we being in a super bull market, which is about to hit the word R word, that is recession. Thank you. So what are the signals to look for when you are trying to spot a bubble? Or you say, oh, now the market is going to come down. So first is individual investor sentiment. Try talking to anybody and they believe markets can only go up. This happens very often in real estate, saying, oh, markets will always go up. God does not make real estate anymore, therefore you are going to get 24% return. I have not seen too many real estate projects giving 24% return over the next 30 years. It does not happen in any market, right? So, but when individual investors believe that the market can only go up, it's fairly obvious to people, and they say such a big population, so many people are going to invest, some $10 billion have been invested in Indian infrastructure, all that boom is going to happen, blah, blah, blah. The government is great, the government is coming back, the government is going out, whatever you want to hear, you will be able to hear, and everybody is euphoric about the market. That's a very good signal that the market is going to go. I mean, we are in a bubble, so that's a good indicator of being in a bubble. All YouTubers will tell you that over 5 years you can never lose money in an SIP, over 7 years you can never make a loss. Here is a chart of past performance. Remember what I told you, past performance is never ever a guarantee of future returns, but yes, we have to use some number. So here you will have people saying you will get 15 to 18% return, so put lot more in equity. So right, so some of us are the FOMO creators who say, oh, this is going to happen, that is going to happen. So don't worry. Market sentiment by the media is what causes FOMO. It tells you that are young billionaires, young millionaires. Just imagine somebody coming and telling me, you have failed in life, you should have done a startup and blah blah blah. 15 years back also it was booming, you could have done, right? So I have to make sure that I don't get carried away by these things and say, oh, let's do some new business. Does not excite me. I'm not capable of doing. I know what I've been able to do. I know what I have done, right? So that's important for you to avoid FOMO by staying away from media which is overly optimistic, right? So whether these .com kids are 10 times richer than you or 20 times richer than you, doesn't matter. I get videos, I get video helps saying how I should go on SEO and increase my subscriber base by a factor of 10, etc., right? I have to ensure that I don't get carried away and I'm not hit by FOMO. Another good indicator that the market is booming is a lot of people borrowing money to buy shares. Now, when lot of NBFCs and banks start lending against shares for you to buy more shares, or lending against mutual funds to buy more shares, there's a good chance that you will that you'll see a debt spike, and between more and more people are investing in equities. Let's say a very big lender suddenly comes into the wealth management business, and his entry point, he says, I will give you money at 7% against your mutual fund portfolio, or 6% or 8% or whatever. This is just an entry level strategy to look at your investments and say, what do you have? Then going and pitching to you other products becomes easier. So suddenly if you have loan against mutual fund, loans against property, loan against shares booming, loan against gold booming, and the equity market booming, try to draw a connection. RBI gives these figures whether people are borrowing against shares to buy more shares. When there is too much of leverage, obviously it hurts a country, it hurts a company, it hurts individuals. So that could be a great signal of a just forthcoming bear market. Then there is a time when low quality stocks start booming up, and people tell you, oh, Adani is going to take a stake, Ambani is going to take a stake, oh, they're in this power, they're in that power, so all these things are happening. So therefore you need companies which make power equipment, right? So all these things will be fed to you. So some Andhra mechanical and industrial power, which was never quoting in the past, will suddenly start quoting at 6 rupees. They will declare a 10% dividend, and therefore you will find it's very attractive from a dividend yield point of view, right? When you do all this, you can be sure that the R word, dreaded R word, is somewhere close by, and these are good indicators that there is a fall in the market coming. So how you should handle, I've done many videos in the past, recheck your asset allocation, make sure that if you are unable to sleep in the night, reduce the amount of equity that you have, do all those things personally which you must do. But here let us look at some more signals from the market to tell us that this is a great time to be exiting.